Hey everyone, this is Jay, also known as jaynemesis, over at eToro.com, where I trade as a popular investor. This is another vlog episode, one that's been in some demand for a while. People have continually asked me to do one about Bitcoin, so here we are. I'm going to cover some thoughts about the halving, an explanation about what the halving is and how mining works as well, for those of you that are perhaps a bit newer to it and not quite as well informed as you could be. So hopefully this will help some of you guys out in understanding what it is, why it happens, and what it really means. So yeah, I've got a few charts up, so I'm going to switch over to my first screen. This is a website called CoinDance. Actually, before I do this, yeah, before I do this, this is like a live environment, so you're going to have to forgive me if I'm kind of jumping all over the place. Before I do this, I should probably explain how the halving works, right, and what it is and what it's for. So Bitcoin has got a fixed supply of Bitcoins. 21 million will ever be created. It's actually not exactly 21 million, but that's kind of besides the point. And the way it works is that to begin with, every 10 minutes, 50 new Bitcoins are created. This happens in every block, right? So a block is on average 10 minutes long, and every time someone validates the transactions within that block, a miner that is, they create 50 new Bitcoins out of thin air that get added to the network directly to that miner's wallet. So they just get created as a reward for them validating the transactions. In order to be a miner and to participate in this lovely event of getting free Bitcoins every 10 minutes, you have to perform some computation. This is called proof of work. And the idea here is that by proving that you are doing lots of work to earn your lottery tickets for those free 50 Bitcoins, you can use your computer to do some calculations. Basically, the Bitcoin network automatically counts how many miners there are, how much power there is in the network, decides a difficulty level. So the more people that enter, the harder it makes it. And then everyone essentially just continually just churns out numbers until they get the right sequence to have the winning lottery number. Once they do that, they send that number across to everyone else in the network. They all validate it, make sure that it's correct, send it back, and then that new block is confirmed. So essentially, you need computing power in order to create these lottery tickets, right? In order to have these attempts. So that's what the hash rate is. The hash rate is a measure of that computing power. Trying to think of where to go. This is not the simplest thing to explain, I guess, in a user-friendly way. So every 4 years, the amount of Bitcoins generated for people who are mining it is cut in half. So when Bitcoin was first created, it was 50 Bitcoins every 10 minutes. 4 years later, in 2012, 2012. 4 years later in 2012, they cut that down. It was right at the end of 2012. They cut that down, so that fell in half. It went down to 25 Bitcoins. 4 years after that, in 2016, it cut in half again, down to 12.5. And just this week, essentially, the past 7 days, it fell again, and we witnessed the halving event again as the amount of Bitcoins generated dropped to 6.75 or something. So 6.25, I think. So that's essentially what's happened. In order to mine, you have to, as I said, do computations on your computer. That meant originally people were using their CPUs. You could mine with a laptop. You could mine with your computer. After a while, people figured out that they could, write the software to work better with graphics cards, which are better at that sort of a computation. So people mined with graphics cards. And then again, not too long after that, people realized that actually the best way to do it is to build custom hardware with custom software. These are called ASICs, application-specific integrated circuits, or something like that, I think it stands for. And they use those now to mine. So those are like purpose-built PCs that only are really good at one thing, and that one thing is mining Bitcoins. So now that I've given you the explanation of what mining is, I want to share with you the hash rate. So this is a chart of the hash rate on a website called coin.dance. It's actually one of my favorite websites regarding Bitcoin in terms of like just cool stats and interesting things. They've got charts for adoption in different countries in some of the kind of grey markets, I guess I would call them, rather than black markets. It's got loads of cool stuff around, blocks and mining power and all of this sort of stuff. But here we have a chart of the hash rate. So this is showing the hash rate as we go along through time. And this actually only goes back to 2018. I could have used another website and gone back a lot further, so you could have seen each halving. But really, I didn't think that was super necessary. The important thing that we can see is this fall off right here at the end. And if I switch from this chart, which is linear, to a log scale chart, you can actually see really, this is on a shorter time frame, and you can see really clearly here. So this was just around the halving. You can see that the hash rate fell off, and then everyone realized that, it wasn't too bad. They could still mine profitably. They turned their miners back on, and away they went. So obviously, there's a lot of economic things in play with mining. Miners want to make sure that they're making a profit. They have a lot of overheads. They have, the depreciation of the hardware that they've bought. They have the electricity costs. They have staff costs. And obviously, it is still, even though they're, buying a certain number of lottery tickets, it's still effectively a lottery, right? They've still got to have that winning ticket. So, their earnings can be a bit inconsistent at times. So generally what miners do is once they've mined their Bitcoin, they want to sell it immediately because they need to pay those bills and pay their staff and everything. So miners aren't really in the game of speculation. They aren't going to hang on to those coins. They're going to put them straight into the market and sell them as soon as they can. And so that obviously is what leads to the theory that the halving is such a good thing, right? Because if there's 6.5 Bitcoins every 10 minutes that are going for sale, that's a lot of selling pressure on the price of Bitcoin. And if you if you halve it and halve it and halve it, then that's obviously decreasing the amount of pressure generated by that. So that's the theory. That's why people like it. Of course, ironically, when you see the dips like this over here, that's actually effectively a weakness in the network, right? Because along with being a lottery to win some free Bitcoins, you are actually performing an important role in securing the blockchain and validating which transactions get added to that blockchain next. Actually, if I go onto this website here, which is another one I quite like, tradeblock.com, you can actually see the transactions live and the blocks as they're generated. So these are the different blocks. This little line is essentially the length of time between them. So you can see it took 32 minutes for this block to be generated, whereas this one was like a minute. So yeah, this kind of shows you what's going on with the different blocks, how big they are, how many transactions are in them, and which miner mined it. So this one was mined by BTC.com. This one was mined by F2 Pool. So these are different mining pools. So now that I've again expanded a bit, I'm going to talk about what it really means for this halving and what's happened in previous halvings. So hopefully, yes, here we go. Hopefully, I have a pre-prepared chart for you here. So I used the Bitstamp exchange here, and we're actually on a weekly candles because this is such a long period of time. I could even do monthly, to be honest. And you can see all of these blue lines are roughly when the halvings happened. I didn't do it to the exact day, I just did it to the week that it happened. So this is the latest one. You can see the price has gone up during that week. Obviously, as we approached it, since the halving, it did fall back a bit, but now we are rallying back towards it just a little bit. But if we go back and we look at previous halvings, you can see, people like to point this out a lot, that they tend to come before some really big rallies, right? So here's the one in 2016. We all know what happened in 2017. This happened midway through 2016. So we had a few months of, going pretty much sideways, and then boom, huge rally. If we go back a bit further, Back to this one, you can see here, same story. We had a few months of nothing really, about 6 months or so, and then we had this little rally up to $300. A small call-off period, and then we had the Mt. Gox bubble, as everyone refers to it. So this is when Mt. Gox locked their website, so the value just kept going up because everyone couldn't even sell. In the first place, everyone thought it was going to go to the moon, and then Mt. Gox died, and everyone had a terrible time. So this I remember this era well. This is when I first got into cryptocurrency. Around this bubble here. Yeah, pretty wild times back then. It really was the Wild West. But yeah, as you can see going forward, obviously it's changing as I do this. I could actually show this in a log scale. That might be easier to see. But I can't. I never use log scale, so I can't. It's down here. Okay, so yeah, so what this has done is changed it to logarithmic timescale, price scale. So you can see the prices here are actually incrementing in a totally different way. So it kind of smooths out the trend, so you can see things a bit clearer on this long time frame. It helps you see exponential curves, and you can see a really clear channel here, right? Since Bitcoin's birth, basically. What have I done there? Did I use the wrong thing? Oh no, I didn't. I'm just very, very bad at using this tool. Oh, what have I? Okay, I don't think it's liking it because I'm on a log scale. Maybe. Let's try that again, shall we? We'll start down here. Travel along to there, and then yeah. So as you can see, pretty clearly. I mean, you could actually divide this up and show channels and stuff, and people do use this. They have these things called rainbow charts, for example, you may have seen, that kind of show you what's been going on in the Bitcoin price on a log scale over time, and you can kind of average your way and make sure you're buying at a good price. But as you can see, it's pretty clear that we bounced off this low down here right from the very, very start. If you would call that a low, I think that's a bit too early really to be drawing data from, to be honest. So, I would argue that we've already broken out of this, and, this is actually more of a curved channel than a flat channel in terms of looking on a logarithmic chart. But you can see very, very clearly on this chart, look at this, we go sideways for a few months and then huge rally, cool-off period, and then a huge rally again. On this one, again, we go sideways for a little while here, and then this gradual, solid rally all the way through 2017, up until the most recent peak at $20,000. And again, after this, if you actually look and you split this up time-wise, you can see that it's about 40% of the time rallying, and then the remaining 60% of the time is kind of flat to sideways action up until the next halving. And it seems like that's been the same here as well. We had 40% of the time rallying up here, and then about 60% was this kind of downtrend, although we did recover for quite a while in the middle here before this recent drama. So that's how things look in the past. I think it's pretty important not to draw too much from looking at price action too far into the past, for obviously numerous reasons. Things change a lot. The amount of infrastructure that has been built in and around Bitcoin since 2012 is vast, and you could argue that is why the price rallied, right? The price was rallying here because Mt. Gox and a few other exchanges that were born around this time made it a lot easier for people to buy in. Not there, back here even. So in this period, the cool stuff that was being built really helps people actually access Bitcoin and trade it, because when I was buying it down here, there really weren't any exchanges you could use. And then, some were born. I'm just going to delete this channel because this looks horrific. It really doesn't translate well to regular charts. But yeah, you could argue that the reason it rallied here is because of better wallets and the first few exchanges being born, and then it crashed because the exchanges were terrible. And then here in 2016, 2015, we had good exchanges like Kraken being built, and eToro joined back in early 2013 back here. And, they clarified their options here. They added Ethereum in 2016, as did, everyone else, every other exchange. You had the altcoin boom. People really understood what cryptocurrencies were a lot better. So you could argue that's why it rallied here. Since then, we realized actually most of the altcoins are terrible. A lot of the exchanges are terrible. Things are still pretty immature. And perhaps now we're finally reaching a point over here where we're seeing banks like Goldman Sachs, I think, no, JP Morgan now are actually doing the accounts for some of the big crypto exchanges like Coinbase and Kraken, for example. So perhaps you could argue that that is actually what's going to be leading towards the next rally and not the halving. But the halving has been a good indicator. If you had bought at each of these halvings, you would probably be a pretty happy person. So is it going to be the same again? And if it is, how high are we talking? These previous rallies, you're talking about gains of somewhere in the region of 2,500% for that one. And for this one, back here, again, similar sort of thing. Even more, in fact, 10,000% to the top of that rally, just shy. So, if we measure from where we are now by, let's say, so, if you consider those numbers have been divided by 4 each time, then you're talking maybe a 500 or 600% rally from here. Then you're talking about maybe hitting, upwards of 50K. He says unable to measure because he didn't scale the chart correctly, and I've still not done enough. I should probably have looked for 50K up here. So yeah, 50K would be the kind of level that we would be looking at potentially as a very rough target, just by extrapolating from that previous data, or maybe 60K. So that's what we're kind of looking at. You have a lot of people throwing out price targets of a million or 100,000, 250,000 per Bitcoin within a few years' time. And obviously you had a lot of people getting super excited saying, yes, now that the halving's happened, it's all going to happen. But, even by looking at the charts that I showed you, you can pretty clearly see that nothing happens on halving day. Absolutely nothing happens at all. Maybe some of the miners turn their miners off. Maybe some smart people try and attack the network. But apart from that, nothing happens. So it's a bit of a non-event, really. It's obviously it's good. It lowers the inflation rate or the emission rate, I should say, because inflation and emission not technically the same thing of Bitcoin. But that alone isn't what's going to make a rally. We need the other conditions to be right. Something else I wanted to show as I come back to my main screen is I wanted to actually compare for you very quickly. eToro charts I find are actually the easiest way of doing this. I wanted to compare Bitcoin directly with the S&P. Many of you who have been listening to me over the past few months have talked about the fact that Bitcoin has been following or trending with the S&P 500. So if I do a comparison, if I can remember how, to the SPX 500, it doesn't look too great when you're this zoomed out, because obviously this is rocketed during that time. So let's change it to daily, because we are talking about, or maybe even 4 hour, because we are only really talking about the past 4 months. And this is showing it rather horribly, to be honest. Maybe I should do daily. Let's try daily. Yeah, that kind of works. I mean, really what we want to be looking at here is just this year, which is this part here. And you can see a bit more clearly now that I've kind of zoomed into roughly the right. Maybe a 4 hour one was better, or a 1 hour. Well, a 1 hour, no, 1 hour's not going to show me. Oh yeah, I need 4 hour. Yeah, so 4 hour kind of works. So you can actually see a pretty reasonable correlation here. It wasn't too correlated during this point, but as soon as there was trouble in the markets up here, as soon as we saw coronavirus starting to cause some problems, sure enough, the price of Bitcoin was falling pretty much in step with Bitcoin. We even had this little rally here. At the same time, we had this little rally here. Bitcoin obviously is the blue. The S&P is the green. And then, falling down here, yeah, we had some divergence, and there were different points at which both of them were kind of leading indicators. So the S&P kept falling here where Bitcoin started to go up before then. And likewise, as we approach the halving, it seems that perhaps they have actually split again, and they're not so correlated anymore. This latest move here, which has happened over the past couple of days, is really what's giving me confidence that that might actually be the case, because at this point here, you can quite clearly see that Bitcoin is going up at the same time that the SPX is going down. The SPX has had this double top here in price, potentially. Or potentially head and shoulders, you could call it, with a shoulder here, a shoulder here. We're going to come down here maybe. We'll find out later today when the markets are open. So it's looking pretty interesting at the moment, because if Bitcoin can kind of make sure that it stays separated from the SPX and doesn't get dragged down by it, we could see it actually take its spot as doing the job it always claimed that it would do, right, and being a hedge against traditional banking and the traditional finance sector. Up until now, during this drop, it really hasn't done that. Maybe in the past week or so, but you could quite easily put that down to speculation around the halving. Even this you could put down to speculation around the halving. Ultimately, we won't know how well it's split for another week or so, until everyone's kind of forgotten about the halving and moved on. But it's definitely something worth watching, and there could be a good opportunity, because not only do we have the halving on side now, and knowing that hopefully, possibly, based on previous data, there will be a big rally in 6 to 12 months from now, and we'll all make lots of money. But even without that, it could well be that if there is more doom and gloom in store for the general economy, and specifically if there is more money printing going on, then that money's got to find its way somewhere, and it's either going to go into the stock market or into Bitcoin or into gold and silver, or the housing market. It's going to go into one of these places, and the rest of those things are much, much, much more closely correlated with the overall economy and the S&P 500 than Bitcoin is. So, to me, it seems like the sensible thing would be for people to put it into Bitcoin and perhaps precious metals like gold and silver, and that's where we'll see a rally there. I did actually notice, I don't really follow gold and silver too much, but Tom, if you're watching, Tom, hello. Tom runs a YouTube channel called Social Trading Vlog. He kind of copies lots of different traders on eToro, and goes through his own sort of journey on eToro, and he's gotten more into the gold and silver markets. And something he pointed out in his last video I found kind of interesting, which is that the actual little gold and silver coins are starting to sell out the places that sell them. So clearly, that community of people are stocking up and getting ready for something bad to happen in the markets. And of course, that means that option may become more limited, and perhaps those people that would normally go to gold and silver, maybe they don't trust the paper gold and paper silver that you have on the markets via ETFs and things like that in different funds. Maybe they will come to Bitcoin instead. Of course, all of this is speculation. Obviously, please do your own research. Personally, I am actually not super bullish on Bitcoin right now. I am a bit cautious. I would much rather kind of wait and see how things unfold over the coming weeks or so. I feel like we have some sideways movement in store. Obviously, I don't have all of my indicators turned on here. I actually don't usually use Bitstamp, but I'm thinking that we're going to go sideways for a few more months yet, as we did after the previous halvings, before we really start to see too much action. What I'm looking for specifically as an indicator is how Bitcoin acts in correlation with the S&P 500. So that's what I'm going to be watching for. But obviously, do your own research, do your own due diligence. This isn't trading or investment advice. This is just my thoughts on the situation, and hopefully a little explainer, if a little bit rambly, about what's going on and what I think about the situation. So thanks for watching, everyone. I will be live streaming on the 14th on Thursday at 4 p.m. So if you're watching this before then, do tune in. Thanks for watching, and I'll see you guys next time.